All right, this is going to be GME video for Monday, June 26th. So I'm going to get straight to the point. If I bring up, the chart that I had, the projection that we had all the way since this bounce at 25 failed, and price broke, had an hourly close below 25. This was the projection I had on for a while, and unfortunately, looks like we're running out of time. So this pains me to say it, but unless price can make a strong rebound to the upside in the first couple of hours tomorrow before the hourly trigger crosses down below the daily trigger, it looks like this potential airplane setup that I thought had a great chance of working is going to fail. And, there were warning signs. There were warning signs in LDPM. Um, Maybe not in the hourly necessarily, but certainly in the daily time frame. Um, at about the mid $24 range, LDPM daily moved well above price, showing a severe lack of liquidity, liquidity that is bad, and this was pretty much a sign that price would fall. Now, I wasn't paying the most attention to daily LDPM. I definitely should have been doing a better job paying attention to that. But yeah, there was some bearish signals. I never, as a rule and as a whole, I never like to be in calls when daily LDPM is bearish. But I really had high hopes of this airplane forming positively, and I held on too long, and it's probably going to cost me. So my plan moving forward, we spoke about this. Let's change this. We spoke about the 2297 level in today's meme stock watch update. So my plan moving forward is if this 2297 level is lost, I'll be cutting my calls for pretty decent sized loss. Now, if for those of you that remember, even though $25 level was lost, I ended up holding on to my September 30s, but I sold the September 31s as a hedge, which is a great strategy whenever you're swinging a long-term position. You don't necessarily have to dance in and out of your position, but it's pretty easy and simple to sell the strike above, which gives you a pretty decent hedge to the downside. Now, in this range, I thought price was going to bounce and form the airplane, which, man, it really looked good. And so I bought back the 31s for a decent sized profit and didn't lose as much money as I would have if I didn't do that hedge. But still pretty decent sized loss, I'd say, overall. Definitely something that I don't plan on doing again in the future until I have bullish confirmation, which would be if we see, a bullish close above 25, if we see LDPM on the daily time frame turn bullish. Obviously, you can see right now it is not. Or if we see this airplane form, but airplane isn't looking likely right now. So for me, that's my plan. If this level is lost 2297, next level below is the weekly trigger, and the level below that is 2138. Now, from the beginning, as soon as the $25 level was lost, 23 was, definitely in the cards. Been saying that for 2 weeks right now. Gavin had it the second $25 was lost. So, this is where we did land. And technically, you might be thinking, this was expected the entire time. Why would anything change here? And the reason is basically due to the data. So let's look at the data report for tonight. And you guys will notice something, it's a pretty bearish sign when VOEX, moves back below this upper black line, moves back into stability zone after spending a period of time in the inhibition zone. Once VOEX moves back down below, that is bearish. Now, can it bounce at the propagation zone? Absolutely. And, this could be a quick dip down followed by a bounce for sure. That would be fantastic if it lines up with 2138 or the weekly trigger. That would be fantastic. But, if we look throughout the history of GME, you could see when VOEX spends some time in the inhibition zone and then it cracks down below, price usually results in a nice dip in price. Now, again, for example, let's see, in this instance, VOEX cracks down below, price dips, but it bounces fairly sharply. And other instances, VOX dips back down into the stability zone, and it's a elongated downtrend that price moves into. So it really depends. If we can get, if as long as VOX doesn't dip into the propagation zone, the long-term bullish thesis still remains into place. And, we can see bounces at 22.67, 21.38. Again, this is assuming price loses this 22.97 level. If VOX dips back down below into the propagation zone, that would kind of eradicate the GME bull thesis. But I don't even want to talk about that right now because, like I said, the way we have this counted, Gavin, myself, etc., we're currently in wave 3, and wave 3 consists of 5 waves to the upside. So wave 1, wave 2 pullback, which could have stopped at 25 and kept going, could have stopped 22.97 and kept going, and could stop at 21.38 and keep going, move up to the upside. But this is considered a bullish pullback that you kind of want to buy for this monster move higher, the wave 3 in the macro wave 3. So, we'll get to that when we get to that. But again, if 22.97 is lost, downside levels to expect is this weekly trigger first at 22.67. And if that's lost, more than likely price can head down to 21.38. Now, one more thing I want to talk about, 20-day return is still bullish, but the 10-day return is now flipped bearish. And then last thing I want to talk about, besides, the heat map, purchasing support above, selling pressure below, IV at historical lows. There was a small amount of sold puts today. Now, usually before GME is going to make a monster move to the upside, we'll see a huge amount here, 100%, 500%, 700%, something like that. But, even a small amount, it is possible that it can cause like a nice bounce to the upside tomorrow. So again, I don't expect lower levels until this level is lost, 22.97. So these sold puts may provide a relief bounce. And again, there's still a chance to form this airplane. If price can move back above 23.81, before the hourly trigger crosses down below the daily trigger, which would probably have to happen in the first, couple of hours of trading tomorrow. Then again, there's a shot at that it's a good chance that 22.97 was the wave 2 bottom, and price can now make an explosive move to the upside. Of course, that's only confirmed with an hourly close above 25. But even if the sold puts do provide a little bounce, I wouldn't be excited until price can move above the hourly trigger again. So I think that's it. Lesson learned. Don't get overly bullish waiting for a setup to happen. I think it's better to just wait for the setup to happen. Now, over the past couple of years, I've been really, really good with this, with waiting for confirmation. But I think I just got overly confident, overly bullish in this setup that I thought was pretty much guaranteed, and fell asleep at the wheel. But one thing I will say, for all you guys that track Ethereum Classic, okay, that hit. For all you guys that track Ethereum Classic is known to run before, GameStop runs. So for those of you who are unfamiliar with this, let me show you how it looks. GME, we'll go to the daily time frame, and, we'll take everything off, straighten it out. And, you can call this tinfoil or whatever, but this actually has made me and, some others a significant amount of money just trading this theory. So you guys can see, if I could line this up correctly, ETC tends to rally. ETC is the yellow, GME is the bars, obviously. ETC tends to rally a little bit before GME does. So you can see this monster move followed by GME moving higher. You can see this big move followed by GME moving higher. You can see this move followed by GME moving higher. Same thing here again. Even same thing here again. ETC bottoms and moves up Wednesday, December 28th, and GME bottoms and moves up Monday, January 9th. Very similar pattern. So, in the past, one of our biggest ways that we've made money on playing GME calls is wait for ETC to rally, and then, shortly after, buy some calls in GME. And GME, as you guys can see, ever since, the January saga, it's worked. For this rally, 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 for every rally. It has worked in the past. And not just that, as you guys can see, the downside also follows ETC. ETC spikes, starts going down, GME spikes, downside follows. It's pretty tight correlation. I was in a fintech course trading with beta, and when something has a pretty positive beta, there are a lot of trading strategies to that. So as funny as it might sound, the fact that ETC has rallied a nice percentage off the bottom makes me think that as GME moves down here, kind of think, maybe we haven't hit bottom yet. Maybe we do have to come down to that 2038 level, but I do still believe that that can be followed by a significant upside spike, just like we can see here in ETC. So I'm confident that even if we move down to 2138, I will be able to catch a strong upside move when GME finally is ready to go. Thanks to Gavin's levels, thanks to indicators like LDPM, we'll see daily LDPM turn bullish before any rally starts. We know we have ETC running, so even if I take a loss now in my current position, I know that even if price moves down to 2138, and if we see signs over there that that's a bottom and I buy back there, I'll make just as much money on the upside. So I'm sitting tight for now. Any loss above 22.97 for an hourly close, I'll be out of my calls. IV is also, by the way, just something to note, super, super low. So it is possible that even if price has to move all the way down to 2138, that calls will barely drop in price as IV, again, is super low. If IV rises as price falls, then contracts won't exactly lose a lot of value. But of course, trade your plan. Always important to have a plan. And like we said the entire time, we never had confirmation that we're going to have it move higher until either this airplane setup works, price closes an hourly close above 25, or daily LDPM turns bullish. None of them have happened over the past couple of weeks. And so, here we stand today. So hope this video is helpful. Reach out with any questions, and talk to you guys tomorrow.